What's going on, everyone? Welcome back to my channel, the best place for young professionals who want to buy, sell, or invest in real estate. In today's video, I'm going to show you how you can invest in real estate using the new construction to assignment method. So if you're a first-time buyer looking to invest, or someone just looking to invest in real estate in Toronto, keep on watching this video because I'm going to go over a method that allows you to avoid hassles such as finding contractors, finding renters, and dealing with competition and bidding wars and stuff like that. So if you find this interesting, keep on watching. Before we get into it, if you can give that like button a click below, show me that you like the video, like the content, and it shows YouTube that I'm doing somewhat of a decent job. I would really appreciate it. And as always, subscribe if you haven't already for more real estate videos just like this one. So what is the new construction to assignment method? Well, from a 1,000-foot overview is essentially buying a new construction property, whether that be a condominium or a new construction house or a townhouse, and then selling it or assigning it before occupancy to another buyer at a higher price. So if you haven't watched my video on the pros and cons of pre-construction versus resale real estate, you can watch that video right here. It goes over a lot of the pros of new construction in terms of price and things like that will really benefit you when it comes to investing and getting a good return on your investment prior to occupancy. So like we've went over before in my previous videos, new construction is great because you get extended deposit structures on properties, which allows you to put down less money prior to moving in. Payment plan prior to moving in, you don't have to put all 20% down at once, so it's easier on the pockets. But another benefit of new construction is the price is lower than it will be once that becomes a resale condominium, or once that condominium or townhome or detached home is actually built. The property does appreciate in value from the pre-sale to essentially right before occupancy. So if you can take advantage of that period and that appreciation and sell it or assign it prior to occupancy, you can get away with acquiring a property, paying less than 20%, and then assigning it to another buyer for a higher value and making the money or the profit in between. So the first step is to find a property that fits your budget. So although you may not have to pay all 20% down, if you happen to find a buyer to assign your property to before occupancy, you should make sure that you are able to pay the full 20%, because it's not guaranteed that you are going to be able to find a buyer prior to occupancy. So you have to make sure that you're able to cough up the money for the property and not get stuck. Okay, so the first step is to find a property, whether it's a condo or a townhome or a detached home that's new construction, ideally something that's 3 to 4 years out, which will give you time with a good deposit structure. So like we went over in a previous video, deposit structures are basically extended payment plans or payment schedules for that 20% down that you would normally have to put down if you're buying something that's resale. So what you can do is put down your initial payment, and then you have all this time up until occupancy, which could be 3 or 4 years down the road, to pay this amount. So once you've acquired your property, step number 2 is to just hold it and wait. As they start to break ground, as they start to sell more and more units, the value of the property is going to increase. One way that you can check how much your property has increased in value is to follow the project and check to see how much comparable units in that project are going for 2, 3, 4 years down the road. So if you see that something very comparable to the property that you own has increased in price and they're still selling it to the public and the building is not yet sold out, you can see that, hey, that 2-bedroom is pretty much the same as the 2-bedroom that I own, and that is 20, 30K more than I paid for it. So likely your condo unit or whatever you may have has increased by the same amount. Another way is to ask your realtors to run the comparables in that area for similar units with similar specifications. So how many bedrooms, bathrooms, square footage in nearby condos, or if it's a condo, or homes if it's a home, and just to see in the area what are the comparable prices. The next step, now that you've waited a few years, made your payments on time, and you're almost at occupancy, is to decide when you would like to list your property for assignment. So you should discuss with your realtor the best strategy for listing your property to make the most profit, obviously. So discussing with your realtor things like timing, whether it's before or after occupancy, if you choose to do that. Maybe the project is really valuable in terms of renting, and the area has come up in development, it's a high rent area, you may decide to keep it. But if you're doing the assignment method, you're going to decide with your realtor when's the best time to assign it and for what price. After that, the next step is to sell it. Have your realtor list it. Some people are still may still be looking for projects in that neighborhood or condominium, so it's beneficial to them, but you get to make the profit off of buying something pre-sale and then selling it for a higher appreciated value. And that's it. Simple enough, right? Before jumping in and thinking that it's super easy to do it, this is just one method, but there are some caveats. The main one is that you have to be financially prepared to hold on to this property if you cannot sell it for a profit, or for whatever reason may come up. You have to be financially prepared and stable enough to actually hold on to this property. So if you can't sell it, you have to, like we talked about in the beginning, be ready to pay the full 20%. Whatever happens, you have to be ready to hold your own home if you're paying a mortgage right now, and the mortgage on this property. Of course, you could rent it, ask your realtor to list it for rent, and hopefully get someone to rent the property and pay the mortgage off, but you should be ready and financially able to take the risk of holding onto another property in addition to your own. So by now you know about buying something new construction and then relisting it at assignment to make that money, make that cash of the pre-sale price to an appreciated price, possibly without even having to put the full 20% down. Again, if you haven't seen my video that goes over the pros and cons of buying new construction versus resale, check that out right here. The link will be in the description box below. Please hit the thumbs up button if you liked it. Let me know in the comments below if you are thinking about doing some sort of real estate investment. As always, I hope this video helped you. Subscribe if you haven't already, and I will see you in the next one.